Well. What's going on, everybody? It's been a while. It's been a couple weeks since I've seen you guys, but welcome back to another Dividend Happy Hour. This is episode, let me get a little closer. Sorry. We're rocking with episode 105 of the Dividend Happy Hour, and I am so happy to be back with you guys. I missed last week. Last week I was gone on my honeymoon, as a lot of you guys know. A lot of fun. Went to Cabo San Lucas for a few days. It was so relaxing. It was so nice. But and also while I was gone, I have my book right here. So I read this entire book on the trip. I highly recommend you guys check out this book. I think every dividend investor needs to read this. This is The Ownership Dividend by Daniel Paris. Really good book. Not a very long book either. It's only about 160 pages. We can talk a little bit more about it later in the video. But anyway, long story short, I'm stoked to be back with you guys for another episode. Really interesting week on the stock market. I mean, they're all pretty interesting, but today and yesterday were very interesting days. Let me show you guys where the portfolio is at real quick, and then we'll get into our other business. So here is my portfolio, checking out my dividend portfolio tracking spreadsheet. As always, you can use the spreadsheet for free. There is a link to it in the description of the video. Right now, we're sitting at about 74.3K. Portfolio still in a really good spot. Not quite at all-time highs. We did see it over $75,000 for the first time earlier this week. First half of the week, it was comfortably above that, but today and yesterday definitely brought us back down to earth a little bit, but things are still going pretty well. And taking a look at all of my holdings for the week, just a quick overview. Really not too bad. I mean, definitely more green than red. It looks like some of these ones down here, Chevron, WP Carey, EPD, Williams Sonoma, all saw some drops this week. But overall, despite today and yesterday, it was still a pretty solid week. Few earnings this week. I listened to Altria's, Starbucks, of course. Listen to that. I listened to WP Carey's. I listened to KRC. Who am I missing here? There's one that I'm missing. EPD. I listened to EPD as well. For the most part, not too bad. Maybe we can talk about some earnings stuff later in the stream. But how about this? Before we do anything else, guys, we got to kick this thing off the best way we know how. So grab whatever it is you're sipping on, guys. Let's do a quick toast. And here's to you guys. Thank you for tuning in with me tonight. Once again, I'm so happy to be back with you guys. I really missed doing this last week. I say this probably too much, but this is one of the highlights of my week. So I always look forward to doing the Dividend Happy Hour. But anyway, here's to you guys. Thank you for hanging out with me for this next hour. And also here's to those dividends, guys. Here's to the pursuit of that sweet, sweet cash flow, because that's really what's bringing us all together tonight. So here's to that. Here's to you guys. Cheers. Let me know a few things here. Let me know a few things here in the live chat or in the comments below if you're watching the replay. I want to know, number one, which stocks did you buy this week? What did you add to your portfolio? What shopping spree did you guys go on? I'm sure some of you guys had some really nice pickups these last couple of days. So let me know all about that in the live chat. Number two, I want to know, what are you sipping on tonight? What did you bring to drink to the Dividend Happy Hour? Personally speaking, nothing crazy. It definitely is not the most masculine looking drink, but it's really not, but whatever. This is just like some pineapple guava seltzer thing. It was like the only, besides water, this was like the only thing I had in the fridge. So we're rocking with that. It's actually pretty good. 0 calorie. Yeah, pretty good stuff. So let me know what you guys are sipping on. Number three, I also want to know, did anything cool happen in your guys' portfolio this week? Did you hit any new milestones? Maybe you hit all-time highs in your portfolio. Maybe you hit 100 shares of SCHD or Realty Income or VG Properties, or maybe you had your highest dividend payment ever. Anything cool, any milestones that you guys want to celebrate, share them here in the live chat. We'll throw them up on the screen. I want to celebrate your guys' accomplishments. So let's scroll up to the top of the chat here and see who we got in the building. I see. Let's see. Wow. Okay. We got Adon, Chris, Shamir, Pat, Jim, Cam the Man. We got Fast Eddie. We got Janice here. Janice had a comment that I saw before we go live. I thought this was really cool. I'm so excited. I got my 18 and 22-year-old sold on investing. They are on the way. That is honestly, that's really cool. That's so awesome that they'll be starting at that age. I started when I was, 26. Started taking it seriously when I was 26, which I still feel like is relatively young. But man, starting at 18, starting at 22, even just having those extra years to compound is really going to make a big difference. And I also think too, and maybe you guys will agree or disagree with this, I don't know, but investing definitely changes the way that you think about money. And I think it inherently makes you more responsible with your money. You know, having this as a hobby, it definitely keeps you from, you want to spend money on you want to spend money on your portfolio and buying stocks, right? And so doing so, it keeps you from spending money on probably some less responsible things. So I think that will, both in and out of the portfolio, I think that'll have a really positive impact on your 18 and 22-year-old. So good stuff. Let's keep going. I see Jackie. I see Mike. I think I already said what's up to Chris. If not, what's up, man? Run DMS is here. Nice. Second Friday. That's awesome. Oh, and by the way, for any of you guys, if this is your first time tuning into the Dividend Happy Hour, we do this every single week. We missed last week because I was gone, but we'll do this every single week starting Fridays, 5 p.m. Pacific time, 8 p.m. Eastern time. So, and it usually runs for an hour. Sometimes we go a little bit over. But yeah, I hope you guys enjoy the stream. Any of you first timers or also all of you usual suspects as well. I hope you guys enjoy this. So there we go. Thomas here says working overtime, getting that extra money for the portfolio. I love it. Dorte's here. Bert Nelly is here. Phildo. We got Dave from the UK. David from Mississippi. Good to see you. Alexander's here. Kama's here sipping on an iced tea. Big week. Wow, look at all these buys. Amazon, QQQ, Nike, Starbucks, Broadcom, and SOXQ. Wow, a lot of pickups. Nice. We got Justin first time in the Dividend Happy Hour. Justin, welcome aboard. Thanks for tuning into the stream tonight. Once again, we do this every week. I hope to see you back next week and all of the weeks after. TF, give me a shout out. What's up, TF? Thanks for tuning into the stream. Happy to see you here, my friend. Pat wants to know, where did you stay in Cabo? We stayed at a resort called Secrets. And I got to give a shout out to my man, Deval. I don't know if Deval's tuning into the stream tonight. Deval, if you are, say what's up. Deval is a member of the Dividend investing community, and he was actually our travel agent. And we couldn't have asked for a better experience. Deval really, really just made the whole thing seamless, made it so effortless. Everything was so easy. It was perfect. And I would definitely do it again. And I would 100% book with Deval again. So my friend, if you're here, let us know you're here in the chat. Thank you again too, if you are here, because it was awesome. So Shamir, there we go. Recession's coming, markets crash. There you go. Seen a couple videos like that. The weather in Cabo was pretty humid. Believe it or not, I feel that the weather here in Vegas, the 110, 120 degree weather is more tolerable than it was in Cabo. And the reason being, Cabo was like mid 80s, high 80s, but the humidity was, oh my gosh, it got up to 50 to 75% humidity some of those days. And it just, at least for me, makes it much less bearable. Thankfully, we were by the pool pretty much the whole time, so that was nice. Vegas is obviously a lot drier heat, so that's why it feels different. But anyway, here we go. What it do though? You already know who it is. So nice they say it twice. Ren from Shy City is here. Very nice. What's up, Ren? In the building. El Dynamico is here. What's up, Antonio? I don't know if I said what's up to Jack Murphy. What's going on, Jack? Andrew, Andre, Kevin Burgess, what's going on? Looking forward to your thoughts on the market fluctuations this week. I don't know. I don't really know what to make of this whole thing. The market just seems like it's been so volatile. Not just, certainly a select couple of stocks, few stocks in my portfolio have moved with some volatility. Williams Sonoma is one of them. last couple of days have been rough for Williams Sonoma, but yeah, I just think stocks have been so swingy, and I think we're all along for quite the ride right now. So, but it doesn't change my approach at all. It doesn't really change what I'm doing. Um, from a long-term perspective, it's when you zoom out, it's all good. Yeah, vacation time. How did Intel do? Intel got completely wrecked. They cut the dividend. Um, I don't know. I haven't really looked at it. I've just seen headlines, but I haven't looked deep into Intel. Once I sold out of Intel, I just it's out of sight, out of mind. I sold that and never looked back. Russ and I, we were talking about this yesterday. We timed that one pretty well. Just got very lucky with that because Russ and I both sold out of Intel at roughly around the same time. Yeah, this is crazy, guys. So was this just today? Yes. Oh, yeah, it was because after hours I saw they had a pretty severe decline yesterday. So 26% drop just today. It's now about to dip under $20 per share. Let's see. I sold back in February, I think. So I sold like right. Oh yeah, like right in here somewhere. So definitely lucked out with that. And yeah, once I did, I just never looked back. Let's see. Chris is here. Chris from Spain. Yeah, okay. Run DMS said UPS is down bad. I actually didn't see that. Well, if there was any crazy drop these last couple of days, but I do know UPS has been coming down quite a bit. So yeah, looks like they've had a pretty rough month. Definitely earnings related right here. Yeah, that's pretty substantial. Year to date, they're down 20%, almost 20%. Last year, 30%. One thing that was concerning to me about UPS, I believe either their earnings payout ratio or their free cash flow payout ratio has been up above 100%. So this isn't a good sign right here, by the way. Net income just consistently trending down over these last few years, over the last 2.5 years. Okay, so not entirely, barely free cash flow positive this last quarter. Last Q1 2024 looked fine. Otherwise, it seems fine. But yeah, the free cash flow payout ratio is now over 100%. Doesn't look like it's always been that case, obviously. Oh, let me do this, actually. Sorry, guys. Okay, free cash. Well, this is interesting. So free cash flow per share is at 124. The absolute levered free cash flow, unlevered, is 140. Levered is 7.4 million. So let's just go on this. 124 free cash flow per share. The most recent dividend was 163. Okay, so 163. So it looks like there's been a few instances, a few quarters where the dividend has not been covered by the free cash flow. This is one instance. Last quarter was fine. Not covered, not covered. Fine, fine, not covered. Fine, 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 fine. So it's been kind of spotty, but there's been a few instances where that free cash flow payout ratio has been over 100%. Oh, this is another thing too, I believe, when I was looking at this. Okay, we're on the income statement. Look at how the payout ratio has been trending over these last few years. It's a very steady increase up if we look at the earnings payout ratio, and that's not a good sign. So as they have continued to raise the dividend, and this is a huge jump, right? So end of 2021 going into 2022, really big jump. That's a 50% raise on the dividend right there. And meanwhile, the payout ratio almost doubled as well. The payout ratio immediately went from 28% to 48%. And, which is not bad. 48%, 49% payout ratio is still fine. And it even dipped back down. But, for the last year and some change, the earnings payout ratio has been very, very high. So I'm not saying that UPS is going to cut their dividend. But I am seeing a few things that could be a bit concerning and that you'll want to keep an eye on with UPS. And what's the yield right now? Yield's 5%. So you are seeing a pretty decent dividend yield. So anyway, let's keep going. Let's see. As far as your guys' purchases, I'm sorry, I'm really behind in the chat. I see McDonald's is no. That's Shamir talking about the earnings. Yeah. Okay. UPS has been a buy. I see. I see some Visa. I see, and I apologize if I'm skipping over some of the buys here. Trying to get a little bit caught up in the chat. Let's see. Yeah, I see some more Visa. I see Chevron and Vici. I see EPD. Yeah, they gave us a little bit of raise. I thought the dividend raise was 5%. I see Amazon and Tesla from Mitch there. JetQ, T-Row, Altria from Shannon, and some more Vici. Wow, a lot of Altria from Mike here. Wow, 50 shares of Altria. Let's see. This is cool. All-time high, Pat. 500 grand in the portfolio. That's crazy. That's a huge milestone. Congratulations. Congratulations. And Kevin, interestingly enough, started a position in UPS. Okay. Couldn't pass up that sweet 5%. Yes. Okay. Yeah, we'll see what happens with UPS. We'll see what happens with it. Let's see. This is cool. Jim, my projected annual income creeped up over 13K per year. Nice. So, I mean, you've been averaging this for a while, but over 1K per month, that's crazy. $13,000 is no joke. What else we got here? Well, yeah, way to go, Jim. Let's see what else we got. See Cube, more Amazon. A lot of VU. I mean, VU and SCHD are staples, right? Those are good ones to dollar cost average. Interesting moves from Tony here. Sold USB and Realty Income, bought SPY and IWM. Cool. Let's see. Nice. This is cool from Oliver. Just hit over 9K in the portfolio and officially over $300 of annual dividend income. Great job. Great job. Let's see. Yeah, I mean, going back to Intel, any thoughts on the continuing disaster? I don't have any serious thoughts. I don't have any serious thoughts about it at this point. For a while there, I was pretty hyped on Intel. I thought it was like a really good cheap stock to buy. My thoughts on it kind of changed over time. Yeah, my thoughts on it kind of changed over time. And I think ultimately I came to the conclusion with Intel and pretty much the entire space that it's just something that I really don't know. I just don't really know much about it. It's probably an industry that I shouldn't be in just because it's just, I don't understand it as well as I can, and I can't wrap my head around it, all the nuances between the companies, as well as I can probably understand like Procter and Gamble or Starbucks or Visa or Williams Sonoma or some of the other companies that I own in the portfolio. I felt like I was playing a game where I had a disadvantage there. And so for me, probably it was best to get out of Intel and stay out of the semiconductor space. Like even with NVIDIA, for example, I can't tell you why that stock has gone up so much. That has to do with the company itself. I mean, there's obviously a lot of FOMO with that company right now, but I can't tell you exactly what makes NVIDIA better than the chips, the product better than Intel or AMD or whoever else. So, let's see. Nice. Andrew here says, I got Visa at 153. That's cool. That's a really nice average cost. 2 milestones, double-digit dividend from Altria for 1073 and over $100 for the month. Great. And the dividend portfolio is getting close to 30K. That's cool. Good job. 30K. Nice. I see some more Procter & Gamble buys. Big SCHD pickup from Anson here. 50 shares of both SCHD and DGRO. Nice. Overall, this is a very, wow, this is crazy. Okay. So bought Google, Johnson & Johnson, Starbucks, Kroger, Walmart, and a few others. Invested 20K total this week. Holy cow. And most importantly, maxed out the Roth IRA and drinking cherry Coke. Very nice. Greetings from Tucson. Nice. Long Rifle M14. Nice. Well, yeah, thanks for tuning in. I love Tucson. My little brother went to the University of Arizona. So I've spent a decent amount of time in Tucson, and really cool place. Let's see. Yeah, a good distinction here, Shamir. Sorry, I misspoke earlier. They completely eliminated the dividend, so which is an understandable move for the company. You know, understandable. El Dynamico says, "I think this volatility is about to test us. Wouldn't you agree?" Yeah, that's a really good point. This is something I've actually been thinking about. This is something that I've been thinking about these last couple of days as things have happened. I would imagine usually when at least in my experience these last few years, when we see these big drops, I'll start getting comments and emails about particular stocks. What should I do? Or even just like market as a whole, what should I do? Should I sell out of my holdings and go on the sideline? What do you think is going to happen? And just in general, as far as is the test that you might be facing, that we investors might be facing with these pretty severe ups and downs, is just to revisit your holdings, revisit why you have them in the portfolio, maybe revisit the financials, revisit the financials, and in doing so, try to understand if your holdings will be able to, if we see things continue to head south and things get worse, can your holdings continue to, can they persevere through that? Or when you look at some of them, do you see them pulling an Intel and suspending the dividend? And sometimes it's unpredictable, but I think this is a good time to revisit your holdings and revisit your collection and take inventory of things. And if things, if you feel that things are still in good shape, then I think that probably don't worry about the volatility. Don't worry about the volatility and the daily share price movements. If you have good holdings, then the severe ups and downs, there's going to be opportunity in there for you to take advantage of. So, but I definitely think it can definitely be a bit unnerving to see. Like I saw Williams Sonoma, I thought it was today. Maybe it was yesterday. But I saw Williams Sonoma, maybe it was yesterday, drop like 7%, or maybe it was earlier this morning. But there was one point where I looked at Williams Sonoma and it was down like over 7% for the day. And you see that and it's like, oh, that kind of stings a little bit. But it could, just going back to volatility, things have been so swingy that it wouldn't surprise me if next week that stock was up 10% in a day. And it's happened before. So I don't know. It's been quite the ride so far. Matt says, news said Intel today is the worst day since 1974. Wow, that's crazy. That is wild. I believe it, though. Didn't you release a dividend calendar with stocks that pay each month? Stocks that pay each month of the year. I'm not talking about monthly dividend stocks. I don't know. I mean, I've probably made videos in the past where I show stocks on different payment schedules that would, result in getting dividends every single month. But I didn't put out like a specific dividend calendar I don't think I did that. But I could have done videos where I maybe covered something like that. Let's see. Yeah, this is a good point. Hold strong with all the volatility. Just hold strong. And if it gets to be too much too, like if you start to get stressed out from looking at the what the share prices are doing, it's okay to just tune that stuff out. It's okay to take a break and walk away from your portfolio for a bit. Well, how do I say this? It's okay to like turn that off, because a lot of times that's just noise. And as you guys know, if you're in it for the long term, sometimes you have to tune out some of the stuff that's going on, because a lot of it's not really relevant to the long term, the long term plan with your holdings. So yeah, if you ever feel like things get to be too much, it's okay to like take a break and shut things off for a little bit. So oftentimes too, I think you'll come to find that when you come back, you really didn't miss anything. And if there is something serious, or if there is something dire that happens to any of your companies, you're bound to hear about it. So okay, looks like I'm catching up in the chat, guys. I'm about 5 minutes behind now. So let's see. Do. Mom talks. Mom talks. I just read your Kabul. I don't exactly know what you mean by this. I think earlier you commented about why did we choose Kabul for our honeymoon. So I think you must have misheard me. I said that we went to Cabo San Lucas, which is in Mexico. I don't know what. I just read your Kabul comment. Mom talks. I don't know. I don't know what's going on with that. Oh, cool. Cam said, starting using Snowball Analytics, thanks to your most recent video, and really liking it so far. Thanks for the recommendation. Yeah, well, thanks for checking it out. I'm really glad to hear that. I've really been enjoying using Snowball Analytics. I'm going to show a bit more of the features in my video coming out on Sunday, my portfolio update video for the month. And it's a really cool platform. Really cool platform. So I'm excited to keep using it and keep showing it. And it's tough, guys. There are so many really solid portfolio trackers out there. And yeah, I mean, I love my spreadsheet, but it doesn't have all the bells and whistles that a lot of some of these other platforms, some of these other like softwares have. So it's been cool to try these other things, whether it's like the Dividend tracker or GetQuinn, or now Snowball Analytics. And I still use, I at least use GetQuinn, even with having Snowball now. I still use GetQuinn on the daily. So there's things I like about each platform, and it's cool to be able to use them all. So, ooh, district trailers. What percent change did your portfolio have today? I'll show you. We'll go back over to the spreadsheet real quick. So I was down 0.3%. 0.3% for the day. Let me see if I can pull up. I'll pull up GetQuinn real quick, because I think that's probably going to be the easiest way to show the weekly performance. I'll show you how things did for the week. So we're looking at GetQuinn, and you guys can use this for free. That's the cool thing about GetQuinn, is it's free to use. And this shows a little bit of a different number. But it looks like for the week, I was down. I mean, these last couple of days really brought me down. I was down about 1%, but we're still up for the month, still seeing a pretty decent gain in the last 30 days. So yeah. See what we got going on here. Look at some of the dividend stuff. Yeah, it looks like August is going to be a really nice, pretty solid month of dividends. October is going to be crazy. $272. Awesome. Let's see who pays in October. This will be higher than it is today. That 272. We'll get more than that, because I'm buying into VU every single week. Yeah, probably won't be too much higher. So, but yeah, 272. Can't complain about that. July was a rock solid month. $300 for the month. I love it. Oh, Paco. Guys, this is my friend Paco. He lives in my apartment complex, and he's one of my good friends. What's up, senor? Paco's in Mexico right now too, so I hope you're having a good trip, man. I miss you. Hope you're doing well. the gym is pretty quiet without you, man. So hope to see you sometime soon. Let's see. Caleb, happy Friday. What's your opinion on BMS? I don't know if I'm familiar with BMS, but let's take a look. Let's take a look at it real quick. So BMS, biomass. Oh, well, no. BMS. I don't know. What is BMS, Caleb? It's not pulling up. Maybe you meant, I don't know. The only other thing I could think of was Bristol Myers Squibb, BMY. And I think I apologize that I missed it earlier, but I think someone asked me about UWM, which I think is United Wholesale Mortgage, right? No. This. Wait. Oh, United Wholesale Mortgage isn't even a publicly traded company. What am I thinking of? There is one of the mortgage companies that's public. United Wholesale Lending, maybe. That's what I'm thinking of. Maybe not. Maybe I'm just tripping. Anyway, UWM is a great. Yeah. Why isn't it pulling up UWM? UWM stock. So this is what I was talking about. United Wholesale Mortgage. I thought it was one of these mortgage companies was publicly traded. Okay, UWMC is what you're talking about here. Okay, what is this company? Okay, so mortgage. UWM. Okay, I think this is the same thing. This is. Yeah. This is the same thing. United Wholesale Mortgage, same logos, everything. Right? Go to the website. Yeah. Okay. So I wasn't crazy. I thought I was crazy for a sec. So I'll be honest, I've never looked into this company. I've never looked into the financials. That's interesting. Okay. 4.9% yield. Looks like, yeah, I don't know. For the last 3 years, the dividend's been stagnant. Looks like margins are declining. Well, what? No, not margins, but the revenue's been declining over the last few years. Operating income has been in the red a few times. Same with net income here. I don't know. I don't. This doesn't really jump out to me. Yeah, this doesn't really jump out to me. And the dividend's not. I mean, if we just look at compare the earnings per share to the dividend per share, they're paying out more in dividends than they're earning in net income. In most quarters, it looks like this is the case. So, yeah, I would say just based on this quick analysis, just this quick look at the financials, it's not something that I'd personally be interested in. Ash says UWM is a great dividend stock. CEO owns most of the shares. I don't know. I don't see what makes it a great dividend stock. I don't know. And maybe I'm just looking at it wrong. Maybe because of the type of company, I'm looking at the wrong metrics. So if that's the case, then I apologize. But you know what? I will add this one because it is a dividend payer. I will add it to the watch list. Just keep an eye on things. So thank you for sharing that with me. I appreciate it. That's the cool thing about doing these streams is I feel like I learn about a new stock at least every week usually. So this is really cool, guys. So Jacob didn't buy any stocks this week, but paid off the house. Dude, Jacob, unreal. Time to steamroll SHD, QQQM, VU, and JEPQ. I think I'll be able to do 2 to 7K a week. Holy cow. Man, that's crazy. Yeah, you're in a good spot. Congratulations for paying off the house. That's awesome. We just got this a few minutes ago from Kama. Belated congratulations on the wedding. Have a margarita on me. My man, thank you so much. That's super nice. I'll tell you what, I had a lot of margaritas in Mexico, and since I've been back, I've been good. I did go to Juan's Flame and Fajitas earlier this week, so we had a friend in town. But yeah, otherwise for the month of August, I'm trying to be dialed in, trying to be good. So, but man, thank you so much for the super chat. That's really nice. Let's see. Sorry guys, I'm just scanning, getting caught up here in the chat. Dividend Diary, what's up? Hello from Poland for the first time. Matt says, how did you come across Snowball? So I've been familiar with Snowball I've been familiar with them for a while now. I've been seeing their ads quite a bit. I've seen some other people promote them, but they reached out to me to do a sponsorship, which is what you saw in my last video. And that was really cool. So yeah, I'm now an affiliate of Snowball, which is awesome. So I'm going to keep talking about them, keep using them. And I do think I mean, bias aside, affiliate bias aside, I feel like it's a really solid platform, and it's that and GetQuinn are two of the best platforms that I've used. And I know I'm biased in saying that. And there's, obviously I benefit from saying that, but I actually do believe that. And that's kind of just so you guys know too, like when it comes to sponsorships, when it comes to promoting things, that's, I got to keep it like that. I got to keep it things that I actually use or think could benefit the audience. So, and I definitely think that is the case with Snowball and also with GetQuinn. But yeah, I'm really stoked about Snowball lately. So anyway. Yeah, this is a good question from Reese. I feel like I get this question a lot, and I've answered it in previous videos. I think if you go on the channel and scroll down to like the Q&A playlist that I have on the main page of the channel, I think I answered this question in one of those videos. But there's a few different things that determine which positions I'm adding to. I mean, number one is certainly price. Just absolute price movement, what's going on with the share price. If it's seeing a pullback, then I'll be more enticed to want to buy into it. And that's been the case with Starbucks for sure. Johnson & Johnson for a while had been like that. Johnson & Johnson saw a really nice run up lately. And now I think I'm in the green with J&J, but for a while when it was in the mid 140s, I was buying it consistently because just because of the direction the share price had headed. But those are also based on, to answer your second question, do you only buy more shares when it's below or around your average cost? In those instances, yes, I was buying because it was a good opportunity to average down. And ideally you will be able to have those opportunities. And like you said, you don't always get those opportunities if all your stocks are in the green. And sometimes too, sometimes there's just nothing that you want to buy, and you can force it. Like you can always buy whatever stock you want, especially if you have the ability to buy fractional shares. You could buy anything at any given time as long as the market's open. But sometimes, as an investor in control of your capital allocation, it's not always the most prudent use of capital. And you might look around your portfolio, and outside of your portfolio, and not see anything that interests you, in which case it's okay to build cash. It's okay to stack cash. A lot of investors do that. And a lot of investors will take their weekly or monthly contributions, only invest, I'm just making up numbers, but some investors will invest, 50% of their contribution and then keep 50% as cash, just kind of as dry powder in case a good buying opportunity comes along, and then they're ready to go. They've got a solid cash position that they can load up into that stock when the time is right. So there's also nothing wrong with not buying things and being patient and just waiting for the right opportunities. Sometimes sometimes like there's different mood depending on the mood of the market. There are times where there's more discounts than you can manage and more good buying opportunities than you know what to do with, and you can't take advantage of them all. And then there's times where, like you said, it doesn't seem like there's anything worth buying. So it's definitely a juggling act sometimes. So, and that's outside of your control. You know what I mean? If there's nothing to buy, there's nothing to buy. But what you can control is your process. So continuing to look at new companies and build out your watch list. This is where something like I'll show you guys how I've set up my watch list. So I've got two. I've got companies that I want to buy. I've got companies that I might want to buy. Companies that I might want to buy are the ones that I'm just kind of chewing on. They're ones that I'm still researching, still getting to know to determine if they're ones that I ultimately will want to have in my portfolio. If they check all my boxes and they're ones that I can look at and say, I know that I want to have that in my portfolio, then I add them to this list here, the companies that I want to buy, that I actually want to buy. I might want to buy versus want to buy. The only one that's on that list right now is Rollins. And man, you guys have heard me talk about it before, but oh, and I actually need to catch up on their earnings. I didn't see this. I mean, it says I clicked on it, but I don't think I went through it. But yeah, I really want that one to come down. It'll be a sweet day when I add that to the portfolio. But hopefully this answers your question. One thing that I didn't quite answer yet that I will here to kind of close it out. I don't only buy stocks that I'm down on. I don't only average down. It's preferable, but that's not always the case. Like there's been instances where I've bought like Visa. I bought Visa above my average cost a few times because I wanted to build out that position. And so I did that with Vici too. Like as soon as I bought my first tranche of Vici, it started to go up, but I added a few more shares on top of that as well because I wanted to keep building it out a little bit. But I don't want to say it's gotten away from me, but it's starting to. And sorry, I'm going on a tangent now. That's the tough thing about investing in stocks. This is where it becomes kind of this is where you can sometimes become your own worst enemy, because when you buy into these companies, you get anchored to that price. And when they appreciate in share price, which is a good thing, it makes it harder for you to want to buy that because you're anchored to your average cost per share. Like for example, we can look at Williams Sonoma is a good example for sure. So I'm already up 110% on Williams Sonoma, even though it's seen a drop, probably over a 10% drop just in the last couple of days. Like I'm still anchored to this price right here. It's still so far away from my average cost that it's hard for me to want to buy any shares right now when it's seen a pullback. And even if it got down to like $100 per share, which is probably a decent price for this company, it's probably a fair price for this company, I would still look at it and be like, I don't know, because my average cost is 66.5. So I don't know that I want to buy it at $100 per share, which is objectively is probably a fine price because it's going to raise my average cost. So, we tend to get anchored to our cost bases, probably in a lot of instances to our detriment, because it can be detrimental because these companies, when you buy them, you plan to hold them for a long period of time. And you also buy them because you expect for their intrinsic value to increase over time. And so if those things occur, then, inherently these stocks will be worth more. So even though with AbbVie, what we're looking at, even though I bought it at 114.20, it's at 189.29. I don't know. Maybe it's overvalued right now. Who's to say? I don't know. But, it could be worth, even though my average cost is 114, it could be worth 150, or it could even be worth 190, but it's even if it's at its fair value right now, it's hard to want to add because you get so anchored to that, your average cost. And it's something that you have to work to overcome for sure. And and I do think I haven't been good about this. This is something that I actually need to do. It's one thing that can really help mitigate this and can be helpful. I should probably add, sorry, sidebar. I should probably add a column in a column or a full page on the spreadsheet just for this, but it would be helpful to have like fair value ranges for each of your holdings. So, and I've seen some of you guys who use the spreadsheet and have shared it with me. I've seen some of you guys add this to your spreadsheets, and I think it's really smart. A section that shows like the range of fair values that you would want to buy it at, to where it if it dips into that range, the spreadsheet will tell you it's a buy. That's something that I probably need to set up. And I actually, I kind of have that over here on the watch list page actually. So let me zoom out a little bit and show you. I should probably just add this to the positions page. So like if I put in Rollins, for example, there's a section for my target share price. And if my target share price it probably should be a range, not just a strict price. But if my target share price is 42, it'll tell me that it's still above, it's still 14% above that. And if we used AbbVie, like for example, on the positions page, I should have something similar to this, to where if I say, okay, I want AbbVie to, I think AbbVie looks good at $150 per share or below, then I can look at this and say, okay, it's still 26% away. But I think it'd be helpful for myself and any investor to have like a target share price, so kind of the range you're looking for. And I think that'll help you break the anchoring effect, if that makes sense. And sorry, I didn't mean to go on a tangent. Is actually helpful for me to talk about that though. Okay. Let's keep moving on. Really good question. Yes. Yeah, Pat, I agree with this too. Simply Safe Dividends, it's a little costly, but has a lot of advantages. Yeah. I agree. I really like Simply Safe as well. I like the data that they show. I really like it. So really like it. Let's see. Yeah, Trevon says LVMH and same company, LVMUY, just keeps hitting new lows. I've seen that too. Fine by me. That's one that's on the companies that I want to buy list. And it looks like LVMUY has had a pretty poor month. They're down 10% just in the last 30 days. I want to check out their earnings. I haven't checked out their earnings for the first half yet. It looks like they put them out on the 24th. So that's something that I need to do at some point. Air Lease, ticker symbol AL, which is a company that's also on my watch list, saw a really big drop today. Looks like they reported some interesting earnings as well. I haven't gone through the call or anything, but yeah, they're down 14% just today. So that's interesting. Anyway, let's keep going. I'm like 15 minutes behind in the chat now. Scroll down, and I apologize if I skip over some of your guys's comments. Let's see. Yeah, Ash says, do you watch other dividend investors on YouTube? I do. I do. I do. I watch. I'll even show you I try and subscribe to as many as possible. I'll show you what my subscription page looks like on YouTube right now, so you guys can see kind of. I'm not able to watch every single video, but here's what it's looking like. Here, can we do that? This is what my subscriptions are looking like. So as far as dividend investors, we got Simply Safe over here. I'm really happy to see them starting to post more actively on their YouTube channel. This is really good content. Dividend Bulls on here, Average Joe. Let's see, a lot of watch stuff, a lot of Las Vegas stuff. So I don't even know why I'm subscribed to Cigars Daily. I went through I don't want to say a cigar phase, because I never went through the actual phase, but they were interesting to me. I wanted to learn more about them, so I subscribed to that. Yeah, Dividendology's on here. Everything Money's on here. We got financial education. We got dividend data. My man JJ Buckner's here. Long-term mindset, really good channel. Highly recommend you guys check it out. Daniel Pronk, Beavis Wealth, Fast Graphs, dividend growth investing. My man Jake, the patient investor, I've really been enjoying lately. He's got a really, really great channel. I think you guys would like it. Humphrey Yang, my man Kai's here. Really like his channel. My man Ari Gutman. I don't know if I shouted out Daniel Pronk already. He's got a good channel. My minority mindset's okay. The diplomats, of course. Love the diplomats. Mark Rusin, my man Professor G. Who else we got? Yeah. Dream Green Show. So Dream Green was this was like one of the channels that really, really got me excited about dividend investing. My man Zeke over there. Really, really cool channel. Really nice guy. I'll tell you what, though, as far as YouTube goes lately. Oh, there's Jack Murphy. Shout out Jack. Oh, and then here's Darth. What's up, Darth? So yeah, there's I'm subscribed to a lot of channels. I don't catch every single video, but I try to watch as many as I can. I lately though I've been watching a lot of watch content. Like where was he? A lot of watch videos. This guy right here, the Urban Gentry, I've been just binge watching his videos, all of his videos. He's like one of the OG watch creators here on YouTube. And I think he's had his channel for like 10 years now. And I'm going back deep into the archives and watching everything. Let's see. Okay, few more. We got about 10 minutes left in the stream. We'll go through a few more comments. Let's see. Thallium, this is a good question. When building your portfolio, do you give yourself a monetary goal per stock or quantity goal? Not really. I don't really do that. I will say the most concrete goal that I had recently was with Visa. And it wasn't a monetary goal. It wasn't a quantity goal, because ideally over time, like you'll be buying these things intermittently over time, right? Just depending on what's at an attractive value. Visa, I told myself just generally, I want Visa to be the largest individual stock position in my portfolio. And I did get it there. It was there for a brief moment in time. And then now Johnson & Johnson and Starbucks are my number one and my number two. Starbucks, because I've been buying it so much lately. And then Johnson & Johnson, just because I had been buying it and it saw a nice run up in share price. So yeah. Tony says, are you still bullish on Starbucks? I have concerns. Yeah, I'm still bullish on Starbucks. I've been loading the boat on Starbucks lately. Yeah, and it'll go through some tough time in the short term, but long term, I still feel good about Starbucks. So, but yeah, I mean, Tony, I'd be curious to know what your concerns are. Nate, do you have one small cap stock you can recommend? Small cap, I don't really know. Was Williams Sonoma still a small cap? Here, let's go back over to the screen, guys. No, Williams Sonoma what is small cap? I think it's 10 billion or less, right? And then mid cap's 10 to 30 billion. Small cap. Let me just do this. Small cap, mid cap. Okay. So, okay. Small cap is up to 2 billion. Mid cap is 2 billion to 10 billion. Anything bigger than 10 is large cap. Okay. So, so we're looking at up to 2 billion. I don't think so. What's Rollins at? Rollins. No. Rollins has a bigger market cap than Williams Sonoma. Huh. Interesting. What about Watsco? 17 billion. No, I don't know. No small caps that come to mind. A few good mid caps. Well, no, this isn't even mid cap. These are all large caps now. I don't know. I guess not. Let's see. Let's see. TD, what has been your worst investment ever? Asking out of curiosity. So my worst investment, the one that I've lost the most money on, has been 3M. So with 3M, in total I lost, on a total return basis, I lost 27%. So that to date has been my worst investment. They obviously had a nice pop in share price recently, and it's funny. As soon as that happened, I got like a handful of comments that were like, "Oh, probably talking about 3M in a recent." I did talk about 3M in a recent video. I don't remember the context, but I had showed this page right here that we're looking at, and I don't know, someone basically called me a loser for selling out of 3M when I did, which I sold 3M over a year ago at this point. And I actually reinvested that into Snap-on, I believe. Maybe, I don't remember if it was Snap-on, but I reinvested into something much better than 3M. Definitely saw like a much nicer gain than I would have had holding on to 3M, even with that pop. So I don't know. It's funny. How much are you putting in every month? Every month, well, every week I invest $230, just $100 into my taxable account, and then $130 into the Roth IRA. So, and eventually I'd like to bump up my taxable contributions. I'm just going through the process. Me and my wife have been going through the process of wanting to buy a home. We just finally got pre-approved. Hopefully we'll be starting to actually look in the next handful of weeks, in the next few weeks. So once we go through that and get settled and everything, and the dust settles from all of that, I'd like to increase my contributions to the taxable, but in due time. So let's see. Yeah, I've been seeing all of these commercials too. You definitely know it's like election season when you see all the political commercials. Jackie Rosen and Sam Brown. So yeah, for us here in Las Vegas, at least we get those. So let's see. Okay, Manjinder says, I messaged last time also. Can you suggest if we should buy good US stocks, even if we get 15% tax, or prefer Canadian dividends? I mean, I honestly can't make that suggestion for you. That's something that you will have to determine for yourself, is if the company is worth paying the 15% tax. And as far as preferring Canadian dividends, once again, that's totally preferential. That's totally your preference as well. If you prefer Canadian dividends, then I don't know, maybe it would make sense just to stick to that market. But then again, it's like there are a lot of great US stocks, obviously. And there is a way though to bypass that 15% tax, right? Like I don't remember the Canadian version of the Roth IRA. Is it the RRSP, right? Isn't that what it's called? RRSP. Yeah, I think that's what it is. But I don't know if you still have to pay the 15% tax in the RRSP. I'm not sure how that works, but yeah, I don't know. I can't really say definitively if you should, what you should do based on the tax situation. Do you keep any cash on hand for the big red days? No, I probably should. But I typically just invest my, contribute the money and then put it to work immediately. But I would probably be smart to do so. I'm just probably not patient enough, to be honest with you. That's really what it is. Yes. Okay. Gen X. I'm subscribed to Gen X. I'm subscribed to Gen X. I don't know why he would have been on there. Yeah, if I would have kept scrolling, you would have seen Gen X. Dividend Obsession. I like his channel a lot. I was on his channel once. I'm not sure why I'm not subscribed to him, but I should definitely do that. But yeah, there are a lot of great channels. Lot of great channels. Let's see. Oh yeah, do you watch Andre Jick? I think I'm subscribed to Andre. Once again, I don't really watch all of his videos, but prior to getting into this for myself and making these videos for myself, I was like, Andre's channel was one of the first that really helped me get excited about dividend investing as well. I remember when yeah, I mean, when I first got into investing, I definitely don't watch as much investing YouTube as today as I did like when I first got into it. But how I am now with watch content was how I was with dividend and investing content in general when I first got into it. I mean, you guys know how it is. You first get into it, you are just so excited. You want to, eat, sleep, breathe this stuff. And I would just spend hours watching this stuff, learning everything. I watched, and the channels that I really spent a lot of time watching and really vibed with, and that really like drove me to want to hone in on dividend investing were Andre, it was Gen X, PPC Ian, which obviously I'm subscribed to him. You would have seen him on there as well if we would have kept scrolling. Russ for sure, Darth for sure, JJ Buckner. There was a guy, Dividend Data was another one. Bruce Wang. I don't know if you guys remember Bruce Wang, but yeah, in my mind, he's like one of the OG dividend investing creators. He kind of switched gears, I think, towards the end of he hasn't posted videos in years at this point, but he used to be big into dividends. I think I already said Andre. I know there's some others that I'm missing, but those are the ones that come to mind. I know there's some other ones that I'm missing though. Yes, Shamir. It's funny that you bring that up because I was thinking of Campbell's Soup recently. I have a tendency to, like, when I sell out of a stock, I'm typically like out of sight, out of mind with it. Just to really stop paying attention to it. But I was looking at Campbell's Soup the other day or the other week, I think, and it's really like, when did I sell? 45.61. It's hardly moved since I sold it 2.5 years ago. It's only gone up like a few dollars, like 10% in the last 2.5 years. So, and 8.5% of that came just in the last 30 days. So all of this is to say, like, when I looked at this, I was like, okay, I'm glad that I sold out of that one and put that into Snap-on. You're right. So it wasn't 3M into Snap-on. I don't remember what I did with the funds from selling 3M. You know what I might have done? No, never mind. I don't know what I did with that money. I bet if one of you guys, if you go back on the channel, you can find me talking about it. Okay. Oh, and we're overtime now. All right, let me just get caught up here and see. Okay. Oh, this is a really good question. Okay, Carlos, what are your thoughts on PSEC? So I think PSEC is one of the stocks I get asked about the most. PSEC's up there. JEPI and JEPQ are up there as well. NVIDIA's up there, but PSEC, I'm kind of torn on this one. So it's not, I have a running list of certified yield traps. And in the past, I would have put PSEC on that list, but I don't think it's as, this is what I'm about to say is the nicest thing I'll say about PSEC. I don't think it's as big of a yield trap as other stocks like AGNC or ORC, which is Orchid Island Capital. But I still think there are better investments out there besides PSEC. So people buy it because it has a 13.3% yield, high yielding stock. I believe it's an MREIT. Maybe it's a BDC. I don't remember. Okay, so Asset Management and Custody Bank. Okay, it is a BDC. Okay. Well, I guess on that note, as far as BDCs go, I think there are better options. And in the past, I used to kind of think of this as a yield trap because of the dividend history chart here. For the last 10 years, the dividend's basically been cut in half. But I will give them this: since 2017, that dividend has stayed steady. They haven't raised it, they haven't lowered it. It stayed steady for the last, quite a long time now. And it does look like the company's financials are, with the exception of last year of 2023, and so far this year, the financials look okay. But I don't know. I still think, even in terms of business development companies, I still think there are better options out there. Like, I would rather invest in Ares Capital. I would rather invest in Blue Owl Capital Corporation, which has, I think this has the highest yield in my portfolio, 11%. So, not much lower than what you're seeing with PSEC. And you get a lot of special dividends with Blue Owl as well, and they've been growing it. So, yeah, since really since 2021, for these last few years, they've grown it. And I don't know if this includes special dividends or not, but we can see if we go to the dividend history. Every quarter there are special dividends from Blue Owl, and also Main Street Capital Corporation. I think those three BDCs are probably like the best options, at least from what I've seen. And so I would stick to those three. Okay, this is also a good question. So, do qualified dividends depend on your actual income from, like, your career, or just your income from dividends? So, just in general, the amount of income tax you pay, which would include your dividends, the amount of total income tax that you pay is dependent on your total income, your income minus whatever your deductions that you have. And qualified dividends, the income tax that you would pay on the qualified dividends, it might be, depending on what bracket you're in, it might be lower than your ordinary income tax. And non-qualified dividends, or ordinary dividends, you're taxed at the same rate as the income from your job. So, but qualified dividends, I believe the maximum tax rate on those is 20%, I believe. Let me double check that. Qualified dividend taxes. Let me see. Okay, let's jump over here and look at this real quick. And keep in mind, I'm no tax expert, very novice at it, so take it with a grain of salt. But here are the tax rates. So yeah, the most that you will pay on your qualified dividends is 20% on the income from those dividends. But it depends. It's not just this amount is your total taxable income right here. So if you make in total over $518, almost $519,000, and if you're single, not married, you will pay 20% on your qualified dividends. Most people are going to be in this tax bracket right here, I'd imagine. So most people will be paying 15% on their qualified dividends. Here's your qualified dividends for 2023. Where are the ordinary dividends? Did I miss it? It's just not on this page. Okay, so ordinary dividend taxes. This might show us. So ordinary dividends are a bit different. I think the most that you can be taxed on these is up to 35%. This is 2023, 2024. 37%. So, but I would imagine still most of us are probably going to be in this tax bracket right here. So ordinary dividends, you're paying 22%. So on the REITs and stuff like that, REITs and BDCs, if you're in this range right here, or this one, you'll pay 22% on your ordinary dividends, which is not really much higher than, the maximum. It's going to be 7% higher than the qualified dividends, I guess, in the same tax bracket here. So that's in a very basic way. That's how that works. Hopefully that makes sense. Okay. Let's see. See if there's any last comments here. Yes, this could have been it. This could have been it. 3M might have gone into Williams-Sonoma, in which case then it was, if that was the case, that was a very good decision. But I truthfully don't remember, but that could have been it. So, but anyway, guys, 10 minutes past the hour, 11 minutes past the hour now. I think this is a pretty good place to wrap up this dividend happy hour. But with that, a couple of things. Number one, thank you guys all for hanging out with me this last hour and some change. I really appreciate you guys. I say this every week, but I really do. I really appreciate you guys showing up every week and supporting me and supporting the channel. It really means the world. And so, yeah, thank you guys for all the support. I really appreciate it. That's number one. Number two, I hope you guys have a great weekend. I hope that you guys have a fun weekend ahead of you, a fun and safe weekend. Number three, be sure to tune into Sunday's video. It's going to be my monthly portfolio update. And just, I don't know, kind of a sneak peek. July was the best month in the portfolio that I've had so far this year. I think from the month in total, looking at the total portfolio value, I think we jumped from, about 69K to about 74K. So really big jump in value in these last 30 days. So I'm excited to show you guys everything that went down. And I'll be showing some of the really cool, in this video, I'll be showing some of the really cool features from Snowball Analytics as well. Some of the things that really make just some of the bells and whistles, and it's some really cool stuff. So I'm excited to put it in a video. I do want to address this real quick too. Reese, thank you. Thank you for the comment. So I applied to be in your reviewing subscribers' portfolios. Hopefully you choose mine. So, and just so you guys know, anyone who has submitted a portfolio review, because I've been, especially like this last month, I've been getting emails and comments about this. I've been getting emails from people. I don't want to, I'm not, maybe not mad at me, but telling me to choose their portfolio, kind of like maybe getting impatient that I haven't chosen theirs yet. I don't know. It's hard to tell an email. I probably shouldn't jump to that conclusion. But anyway, what I'm trying to say is, be patient with me, guys, with the portfolio reviews. So we do those videos once a month. Every month we're doing 3 portfolios. And just so you guys know, at this point, I've gotten over well over 200 different portfolio submissions, and it's kind of a lot to go through. So just be patient with me as I make my way through those. And it's chosen completely at random every single month as well. So, anyway, and I'm sorry too. I'm sorry if it does take me some time. Just I hope you guys don't think I'm blowing you off or something like that. It's just, it's just kind of a lot, which is good. I'm really glad to see all those submissions, but it's also hard to accommodate everyone when there's so many of those. And this is a good question here. So Chris says, can you review portfolios from Snowball? Yeah, absolutely. If you use Snowball Analytics, you can share the link to that when you submit your portfolio to be reviewed. I need to add that to the form though. I mean, if you're going to submit your portfolio to be reviewed and you're already using Snowball, yeah, 100%. But I need to just mental note. I need to add that to the form so people know that you can use Snowball. Anyway, good question. And yeah, anyway, we'll wrap it up there, guys. But thank you so much again for everything. I really appreciate all you guys. You guys are the bomb. And I hope you guys have a fantastic weekend. Tune into Sunday's video. Hit the thumbs up button on the stream one time if you enjoyed this video. And yeah, I will see you guys in the next one. You guys have a great day and a fantastic weekend. You guys take care.